Hans?
The Swiss situation hasn't much changed. We have too much money floating into Switzerland. So the Swiss National Bank continues to have a negative interest rates by 0.72, which is pretty high. I don't know who else.
High?
Pretty low. Yeah, pretty high. But yeah, well. And this has several effects. One of them affects our branches. There's so much cash looking for opportunities to be invested because no one wants to keep cash because then they have to pay negative rents, which leads to an enormous boost of private investors building up everywhere houses. They don't rent it out in on the countryside. The market has already turned there, but they're still there building it because it's an opportunity for them to burn the cash. And they pay a lot of money, much more above that they can capitalize. We had a piece of land recently changed hands. It's 12,000 Swiss francs per square meter, what they paid. It's about 11,000 euros per square meter, which is ridiculous. For us, this prevents access to land. We cannot buy land at the moment because the prices are simply too high for what we can calculate. So we have still a shrinking percentage in market share for the Swiss housing cooperatives. Well, that's been like that for a couple of years. In 2018, we started seeing more political pressure against cooperatives, mainly from the FDP, Federal for the Liberals Party of Switzerland, which is really running a campaign against cooperatives. The baseline is they are state subsidized. And they try to make points on that baseline, and for me it's interesting because I hear similar tendencies from the European Union, which kind of wants to push back from this from subsidizing. There must be a similar discussion I'm not familiar with, but I heard, but I think that could be dangerous for our cooperatives in the future. So, what I said, the negative interest rates, they also have a good impact on ABZ in financing. We were able to finance ourselves on a short-term period with positive interest rates. So we get 10 million and we get 10,000 Swiss francs in addition. So I don't judge this good or bad, it just happens. And it happens, interestingly enough, because I'm always looking for new opportunities to finance ourselves. It happens with direct investments, not from private owners, but from companies that are close to the municipalities, like electricity power suppliers or gas suppliers. They have too much cash. They can read our balance sheet and they invest in us on a direct basis. So we have no banks, we have no securities on the short-term things, and they invest the money in us. Perfect opportunity. The second one, and that's also questioned around here, is I'm checking whether we could issue bonds on the capital market, labeled social bonds. There's a capital market for green bonds and for social bonds. A pre-check showed that we would perfectly qualify for the framework of this social bonds, and I'm trying to get further. The crucial point is that we have to be rated. We have to get a rating, a commercial rating. We didn't have one so far, but we are now getting step by step closer to this social bond market. The thing is that a lot of money internationally, like from the Norwegian oil fund, looks for investments. They have limitations on where they can invest. They invest in wind power and solar power, but these markets are saturated. So they're looking for the social bonds. And cooperatives, in my opinion, are a perfect match. So I'm I'm interested if any one of you, which are much bigger than we are in Switzerland, is already accessing those markets, because the minimal viable issuing thing is about 100 million Swiss francs. So that's the situation in Switzerland.
What's that in euro cents?
About the same. It's 1-to-1.
So I have a question about the negative interest rate. So if you talk about bonds, okay? So does your government issue bonds, like sovereign bonds? What interest rate would they pay? Negative?
Yeah.
So why would I bother?
Safety.
Why would I buy a bond just to lose money?
Because you're on because you calculate on a long-term basis, and you still we get money from insurance companies like that and Vorsorge. How do you say that? That insurance my rent, my future rent.
Okay, I see.
And they invest with negative interest rates, because in their calculation model, still it's worth. They still can get their interest rate in the mixed portfolio they have on a long-term basis. And the thing is, we have this negative interest rate for now about 5 years. In the beginning, everybody said, "Oh, well, wait 2 years and then it's over." So nobody changed their strategy in investment. Now it's 5 years on, and people projecting that it's gonna be 3 to 5 years to come. So investors and those companies adjusted their calculations. And that's why they buy the negative bonds.
Can I just add, I mean, I think the other thing that I'd add as well is that the two traditional stores for money in times of uncertainty are gold and the Swiss franc. And so the other thing that people are hedging is the future value of the Swiss franc, essentially. I mean, you might lose a small amount in the negative interest, but if the Swiss currency goes up 5 or 10%,
Yes.
then actually you're making much more off of speculating on the exchange rate than
But that
you would
obviously
forego.
only works if you're lending in a foreign currency, right?
Yeah.
It doesn't,
Indeed,
yeah.
indeed.
Or you're hedging for it.
Yeah.
Yeah,
That's
effectively
what-
foreign currency. Yeah,
that-
no,
that-
I
that's
totally
what
get
you
the
meant.
point. Yeah.
Yeah.
Maybe that's what Norway's doing. I don't know.
So the question remains: is anyone investing in or issuing social bonds? No. No expertise here as well.
Well, there's impact investments. Do you have
That's
those
right.
in the UK?
I mean,
Yeah.
we've got a lot of traditional bond market activity in the UK from the housing association sector,
Yeah.
and indeed their credit ratings are better than UK government debt. And so, I mean, you know, some of our larger housing associations are, you know, able to borrow at a much better rate than government at the moment. We have an organisation called the Housing Finance Corporation that amalgamates debt requirements for smaller organisations. So it will amalgamate, say, 8 or 10 smaller organisations' requirements into a single issue, and again, 70 or 80 million sterling is around about the entry point for those sorts of amalgamated debt options.
Yeah.
But the social bonds situation that we talked about, that's not something that was currently taken off. But again, you know, I can certainly see the desirability.
Actually, we try to cooperate with the Swiss government or with local government, the municipality of Zurich. They issue bonds for themselves, and we try to sneak in and try to get a portion of the bonds they're issuing. There's some regulations we have to check, but this is a second path I'm trying to.
I just want to double check. Your green bond. We have in Malaysia different green bond because special Sharia compliant bonds. So how's your green bond compared to our Sharia compliant bond?
Oh, I'm not familiar with your green bonds. I know this is an international organization that checks the quality of this green bonds, of the organizations taking part in these bonds. They check whether you qualify or not. I cannot say more. I'm not familiar with the situation in Malaysia. Sorry.
The Sharia compliant bond is Islamic compliant bond. It's different from the green bond.
Yeah.
The green bond basically environment related bond.
Yeah.
So that's different.
Okay.